What's up, everybody? Michael and Coco here. You're watching episode 33 of the Weekly Scan.
The Weekly Scan!
The Weekly Scan is all about finding opportunities in the stock market for the week ahead. In today's episode, we're going to be using technical analysis to review 3 stocks that have the potential to break out very soon. We're also going to be covering what happened and took place last week for the Weekly Scan portfolio. Now, as for a quick disclaimer, these videos are for entertainment and educational purposes only. By no means are these recommendations. These are just me and Coco's opinions. With all that said, let's hop into today's show. All right, so we're going to first start off by talking about the Weekly Scan portfolio, what took place last week. Now, as you know, I was looking at the top 3 utility stocks that I wanted to trade. And right now, what you see right here in the top left, these are 2 stocks that I'm actually still in at this particular point in time. One of the stocks, I believe the ticker symbol was WTRG. I could be getting that wrong, but it was a user error. I did not get filled on that position, so I walked away from it. I did get filled on these 2 positions, and I'm still currently in them. So I did scale out some of my profits, so that is good. Now, I did trade 2 other stocks that I did post on my Twitter, and I believe Instagram too as well. I'm not 100%, but I definitely did on Twitter. I posted a chart about Tesla and ticker symbol NOMD, both of which were losing trades. I got stopped out on, I lost about $10 here at Tesla, and then about $20 here at NOMD. Now, you're probably looking at this and be like, well, how are you up? Like, why are you up from last week if you lost here? Well, I did take some gains from ticker symbol NI and EVRG. And then also on Twitter, I posted a kind of a setup that I saw on the SPY. And because my portfolio was taking a little bit of a hit that day, I looked at this play as an options contract to make up for those losses. So what I was seeing was, and I posted here, you can see on the 5-minute time frame, there was a positive divergence taking place, and there was a nice hammer candle forming right here. And when I see those things after a pull down, it's likely to see somewhat of a bounce. So I started scaling in a few contracts, and what do you know? It bounced up. So then I scaled out of the position. So it was a positive divergence. I caught that on the move up. Now, looking back at the trade though, I feel like I got a little bit too levered for this particular portfolio size. Now, me personally, when I typically trade, it would have been a small position, but looking back at it, now I'm kind of like, okay, so I should have only kept it to like maybe 2, at most 1 potentially, as far as contracts go, but I scaled a much larger position, and it was a very quick trade. So I'm probably not going to be doing that anymore, because if it goes the opposite direction on me, yes, I would have got stopped out. However, my portfolio would have taken a pretty sizable hit. I wouldn't have gone below where I started from by any means or lost all my gains. But still, when you look at it as percentage based, it could have been potentially bad. So I'm going to refrain from doing that, and if I do it, it's going to be just with a smaller position size. So overall, I started this Weekly Scan portfolio on September 5th. That's when I started tracking the portfolio. Now, I don't have the data going back, but you know, if somebody wants to do that, by all means. But since September 5th was when I started tracking it, and I started with a $3,000 portfolio just to track the progress, and now I'm at $3,241.37. That's up 8% in just over a month's time. So let's think about this here. It's a very, very, very good amount, percentage based, to be up that much in a short period of time, including when we started September 5th. September was a bad month for the markets overall. So then when you look at this and you're like, well, you only made $241. Yes. However, for people that understand the risk management factor and how we're playing these stocks, you can do this kind of stuff with larger portfolios, and you know, you can increase position sizes. But if you follow this kind of method where we're just being very diligent and we're looking for specific setups and we're just focusing on a risk, you can slowly build a portfolio up. And I mean, just think about it. If we were to get, you know, 5%, I mentioned this on the last video, 5% to 10%, you know, a month, which is insane. I mean, professional traders don't do that. I mean, they do that, but it's far and few between to be able to hold that for years and years. But if you can get 5% a month for 14 years, I mean, it'll take a $3,000 portfolio clear over $1 million. So You got to understand, though, when you start scaling up your positions, and you got to understand the process of doing that and how big a position should be when you enter in and so forth. So right now we're just starting off at a very small amount, but it's nice to see the progress being at 8% up in just a short period of time and all this market uncertainty. So with that said, we're going to be talking about 3 stocks today, and we're going to be doing it as a breakout play. So we're only going to play it, I'm only going to be playing it, as a breakout. Now, the thing about this is, typically, if you're playing the breakout and you don't buy in beforehand, you can miss out on some runs, okay? But if you do get in beforehand, which we call speculating before the breakout, it could go the opposite direction. So right now, in all this uncertainty within the market, I only want to play the breakout, and then I'm going to have a tight stop loss. So with that said, let's go ahead and just hop right into the charts. So the first chart that we're going to be looking at is ticker symbol EBR. And right out of the gate, so I have a couple moving averages on here. So if it's your first time here, I play with these 3 moving averages because these are more short-term, intermediate-term, just trading strategies that I use. So I have the 5, the 10 EMAs, and then the 20-period moving average. The 20-period helps to see a trend, and then the 5 and 10 act as somewhat of a trigger to say, okay, it's time to purchase this now. What do we got going on the chart? Well, first off, volume. Volume was a nice big move to the upside, and it wasn't really a aggressive day, to be quite honest. Now there's a long upper shadow here, so this very well might start breaking down. However, if it does continue to move up, we do have the 5-period EMA that crossed above the 10, and they're above the 20. So this can act as a trigger point. When did this happen previously? Well, the 5, which is the red, the blue, and the green. So it goes red, blue, green. It has to be stacked on each other like that. Once it broke above here, we saw this nice run up, and then it went sideways, went below, and then it broke out again right here. Boom, went all the way up, then crossed below. That would be the sell point. And then right over here too, we got crossed above. It was really choppy, failed, and then shot back down. Now we're starting to see it break above again. The pattern that I'm seeing is somewhat of an ascending triangle. So we have higher lows building, and it's kind of hitting this wall of $6. So my plan is to play the breakout of $6. So for example, $6.05. Okay, so if it reaches up to $6.05, I'll have a limit order there. It'll get hit, and then potentially there'll be progress to move that forward. Now, it's likely that it doesn't, and there's a couple bear cases here. Well, first off, we're making lower highs. So we have a high here and then a lower high here. So it's boom, boom, and stepping down. So I'm really just waiting for that breakout, because if we do get the breakout, then that would give me more momentum to the upside. It would make more sense to be more patient here. Now, you could technically speculate and get in and have a stop loss under here. I like those type of plays, but as of right now, I'm just going to be patient, waiting on the sidelines, and if I don't get filled, well then that's fine. Then I probably would have lost money anyway. So this is ticker symbol EBR. I just put the green box and the red box there, so you can pull up the chart. The links are going to be in the description, but that's kind of my risk versus reward ratio. I'm willing to risk this red box to potentially earn this much, the green box. And yeah, I'm going to be mitigating shares. I'll be moving my stop loss up if it starts to break out. So keep in mind, I'm not just going to keep my stop loss down here if the price action's up here. I'm going to be moving it up as time goes, because that helps manage my risk to the downside. So this is ticker symbol EBR. Let's go to the next one. Here's ticker symbol CTRX. Now this is a pretty volatile stock, so it's a fast mover. It's a low cost stock, so keep that in mind if you don't like to play this. But another ascending triangle, we have some volume building here. Recently, the 5-period got above the 10 and the 20, so that's a good sign right here. And if we start breaking above this 113, that could be the trigger point to potentially push higher. Now, I'm only willing to risk a small amount, so I'd be really playing the breakout. This could be a very quick trade, potentially, to earn about this much. Now, you're like, why are you only this much? Well, from 115 to 125, it's like a 9% gain. So it's a fairly large gain, and I'd be risking a little. Now, if you look back in the history of the chart, there's clearly resistance up ahead. So if it does break out, I might sell a portion of that. And then when it gets to the target, if it can get there, I'd sell another portion. For example, lots of 33%. So I sell 33%. Then I sell another 33%, and then I let the remainder work for me if it continues to move higher. And if it doesn't, well, then I'm going to be moving my stop loss as time goes, and then I might get stopped out. So this is ticker symbol CTRX. nice volume building. I mean, it's just nice volume building, and then also the higher lows taking place in ascending triangle. So good pattern, good volume, but we got to be patient here. Got to make sure that it actually does break out. Here's the last one. This is ticker symbol OPTT, another very, very fast mover. So position sizing is very important here. And you might be thinking, well, what do you mean? Well, first off, look at to the right, this axis over here. It goes from $2.80 up to $3.60. So almost $1 move on a low price stock. And you can see this candle, this big red candle right here, that it covered that entire distance in a single day. So as you can see, these candles, there's volume building and then it's contracting, but these candles are swinging huge swings in a small period of time. So you might need to keep your eye on this one because it can become very fast moving. Now, if you're trading like I am, a smaller portfolio, you do not want to use 30% of your portfolio position in a stock like this. You need to make sure that you're only doing a 6% position to your portfolio size, which is even big sometimes. Some people just say use 2%. So position sizing is extremely important, but my plan around this, I'd say, this is a bull pennant, ascending triangle. You can call it whatever you want. But what I like here is if we start breaking above this previous trading day, above the high, as you can see, there's a big long upper wick, means a lot of bears stepped in. But if we start breaking above it, that could really set this stock higher because right here should be an area where there's probably a lot of, I would say if anybody's shorting this stock, they would have to cover, but there's also momentum traders. So if we get back above here, they see that, you're going to see other traders buying into that momentum and potentially push it up faster and further. So how am I going to play this? Well, I plan on playing the breakout and then having a stop loss right around this red box. I'm willing to risk this, but it depends on where the candle actually is. So if, for example, the next candle is low is right here, I might have to lower my position size and then have a stop loss below the low of that candle just in case, because I don't want to have a stop loss in the middle of the candle because it could very well just come back and stop me out fairly quickly. So this is just overall just a nice looking setup, and you just got to be patient because this can go lower and then maybe higher, or it might not ever break out. So I'm willing to say if it does break out, chances are we can see it push a little bit higher. So that's all I got for you on today's episode of the Weekly Scan. Those are the 3 stocks. Plan on playing the breakout of them and not getting in as far as the speculation piece goes. So if you have any questions, leave them in the comment section below. Make sure to like and subscribe if you don't already. See you guys on Monday.